Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah, and it promises to be an interesting day of trade, the penultimate day to the union budget. And the Indian markets might move in slight contrast to what the world markets are probably indicating. Let's take stock of all the global news flow first, and that's demand concerns galore. Glo- Whirlpool sees subdued demand in early 2023 as economy soars. The same point, Samsung drops as results show memory and mobile weakness and says global smartphone market to shrink in 2023 again. Global demand concerns. Japan factory output inches down amidst the global slowdown. Global demand concerns and oil has dropped to 3 week lows as rate hikes loom and the Russian flows stay strong and to an extent, again, I would reckon global demand concerns. Um, well, not the best of ways to start off 2023, if you will. Demand picture is not looking all that terrific. That's the problem. Um, Now, what did the US markets do? I think they came off quite rapidly in session yesterday. The Nasdaq has had a really good move the last few days. Some bit of profit booking may be warranted in light of the fact that we don't know what the Fed will end up doing, and as a result of which 2 percentage points lower. The other cues or the other indicators haven't really changed as much. So if you look at the CBO, the VIX numbers, I mean, this is the CBO VIX actually, 19.94. US 10-year yield flattish, dollar index flattish, so no great shakes there. The SGX Nifty though indicates a start which is marginally in the green. And of course, our markets have had a bit of a corrective move already, so therefore this shouldn't surprise anybody. But ahead of the union budget, ahead of the Fed, I mean, this is to be anticipated. Not too many terrific moves, not too many big moves per se. In fact, if the Adani Group stock showed a bit of stability and therefore the the nervousness at the broader end of the market, if indeed they stay stable, might actually stay okay. So what's the trade setup therefore for the day looking like? Well, um, you would argue that it's very unlikely that the markets will have a strong move ahead of the budget and the FOMCs, as I said. Oil beneficiaries would remain in focus as oil prices continue to see pressure at every rise. I think that's the point that comes out, right? That every single rise that we're seeing, there is some bit of a pullback coming in because of demand situation or trader nervousness, as the case may be. We're not seeing a sustained rise in oil prices. And well, that's good news from an India perspective, bad news from what it indicates from a global demand perspective. But in terms of specific moves, remember we've spoken about a bunch of sectors in the last few days. They've all turned out pretty well. And I would reckon that if you want to keep an eye on sectors, aside of what, of course, the budget will do to capex and all of that, and it's a bit of an imponderable. Uh, Tomorrow is also a day of the auto sales numbers coming out for the month of January. And the previews that I see seem to suggest that there is strong growth momentum from Mahindra and Mahindra and Ashok Leyland for the month of January. M&M, remember, it's not the tractors business, but the auto business. And they still have a stranglehold on the SUV side compared to a Tata Motors or a Maruti and Maruti Suzuki. And Ashok Leyland will have a strong CV number as well. Haven't seen that kind of an uptick for the others. So therefore, do watch out for these ones. These two seem to be the ones that are driving attention for most people. Clutch of important results, of course, come out later today as well. So it's an important day of trade per se. How do you view the stocks though? And open is the question that you have to monitor. Now, the Adani Group stocks are in focus for more reasons than one. In Adani Enterprises, they've come out with an announcement post market hours yesterday that IHC Abu Dhabi is going to invest $400 billion in Adani Enterprises FPO. So that's a large chunk of the FPO getting subscribed by a large global insti holder. So that should probably augur well for sentiment. The circuit limits have been revised for some of the other sister concerns, Adani Total Gas, Adani Transmission, and Adani Green Energy. Circuit limits revised to 10% from 20%. Now, uh, for the more liquid names in the group, Adani Enterprises, Ports, and Ambuja Cements, we saw some bit of semblance of sanity yesterday itself, and they recovered from the lows of the day. Don't quite know if this circuit limit revision helps the other group companies as well in any fashion. But for Adani Enterprises specifically, I think this IHC news is important. How the FPO goes ahead today is extremely important. So you've got to monitor that. one standard disclaimer that the Adani Group is in the process of acquiring a 49% stake in Quintillion Business Media, which owns the platform BQ Prime that you're watching currently. BPCL, Q3 numbers, consolidated numbers, revenues up 25% at 119,169 crores, much ahead of estimates was BPCL. So that is actually a good piece of news for them on the revenue front. EBITDA margins more or less in line, if you will. Net profit down 36% at 1,747 crores. The Bloomberg estimate was 1,449 crores. So on the top line and the bottom line, you've got to argue that this one did well. The refining segment clearly beat estimates, right? So I was looking at the Jefferies note on BPCL viewers, and they said that the refining segments beats, but government compensation for petrol and diesel losses are the key. Now they are watching for the budget and whether there is some support for petrol and diesel losses coming in. They maintain a buy with a revised target price of 445. The earlier target price was 410. So they've upped their estimates for BPCL. Refining clearly outperformed marketing recoveries along expected lines, and they believe the marketing segment while remain under pressure, but the budget will provide more clarity on government support, and that the government compensation is necessary for any further upsides on BPCL. So do watch out for that one. Do watch out if Jeffries is to be believed. Tomorrow's budget essentially holds the key for what BPCL as a stock does, or BPHP and RCS stocks do in the days to come. Do watch out for that one. Tech Mahindra, you probably argue on expected lines, though I must say that a lot of people anticipated that the revenue numbers for Tech Mahindra will be very, very shabby. Compared to that, they've actually clocked really good, well on the revenue front, 4.61% at 13,735 crores. The Bloomberg estimates give you a story, right? 13,523 was the estimate. So they've actually done better than what the estimates were on the revenue front. On the margin front, 11.98, the expectations were a bit higher at 12.63. Net profit, therefore, flattish at 1,297 versus 1,300 crores. Ho-hum set of a quarter, if you will. And that's what most brokers are saying as well for this one, that the growth outlook is a bit uncertain and therefore maintain a hold. Now, if you hear the conversation that my colleague Tushar had with Tech Mahindra yesterday, or I had with CP Gunani at Davos, you know that they were not quite sure of what the growth numbers could look like in the next couple of quarters. Very positive over the medium term. Now, whether therefore you bet on the medium term in times like these, IT is looking a bit strong off late, isn't it? And whether you bet on Tech Mahindra or you bet on some of the others is probably the key question. You can pick and choose. The numbers, okay. Then Larsen and Toubro came out with numbers. I just thought that the MK note on L&T kind of gave you most things that you wanted to know. So their rating is a buy with a target price of 2303. They said the margins in the IT segment have dragged the overall margins lower than estimated, and the order flow X services grew by 20%, which is a decent number. They have a buy which has been maintained because of the strong order book and the bottoming out of the margins according to them. They say that they believe that the company is gearing up for building capabilities for future investments, and which are expected to be made on the green economy front, and which is why they seem to be constructive of L&T. Most people believe, viewers, that this quarter kind of reflects the beginning of the benefits of an upcycle. Now, does that make L&T a defensive name to be bought into relative to some of the others? Probably does. I would reckon that you will not see L&T have a dull day today. I don't know what kind of an uptick. I don't know if it stays flat also, but very unlikely that L&T will have a big down day today. So bear that in mind. Some of the things were fairly positive. What was not positive was MRPL. Not a good set of numbers. Revenues were okay, but EBITDA cracked down quite significantly, 83% lower. EBITDA margins 1% versus 8.41%. There's a net loss versus the net profit number as well. So shabby set of numbers. You would argue that one stock that could see some slam dunk today. IFL Finance, on the other hand, could well do well today. NII, much like Poonawalla Finance, which also did well, IFL Finance, NII up 27%, net profit up 22%, gross NPAs improve, net NPAs improve. You can't find too many faults with this number as well of this delivery. So therefore, watch out for IFL Finance. Strong performance on the Q3 front. Some results in focus aside of the ones that we've spoken about are Orient Electric, Nippon Life, and Green Panel. Wherein Orient Electric Q3 PAT was down 14%, but was much higher than estimated. Nippon Life Q3 PAT was above estimated on better than EBITDA margin, but otherwise the numbers were fairly lackadaisical. Green Panel Industries Q3 operating profit margin at 21.9% versus estimates of 23.2%, so much lower than estimates, or at least 130 basis points lower than estimated, and that's not great news. Some stocks in news include a Kansai Nerolac, which will sell Kavesar land for about 655 crores to a unit of Adani, or KEC International, which has got a new orders worth 1131 crores. PVR or Inox Leisure, wherein Inox Leisure has said that the merger with PVR will get completed in about 30 to 40 days. Then, of course, sugar stocks are in focus because sugar has hit 6-year highs on mounting worries over tighter supply, and maybe that keeps the sugar companies in India active in the session today. Some brokerage recommendations aside of the ones that I've spoken about. Gale has been raised to a buy at Citi, price target of 110. Pidilite has been rated a new hold initiation coverage with a hold rating, the target price of 2550 because of the rich valuations of Pidilite. Or Root Mobile, which has been rated a new buy at HDFC Securities with a price target of 1700 rupees. So these are the few things to watch out for. Let's wait and watch uh, how things shape up. Net net, the day before budget, don't expect too many fireworks. Expect a bit of a quiet day today. Let's see how the day shapes up. Thanks so much for tuning in.